Welcome to Rockstock Channel and our ongoing equity overview series focusing on critical raw materials companies that we think should benefit from the rising demand from electric vehicles, energy storage, and other clean energy technologies. In today's episode, Rodney and I will present an overview of Hyperion Metals, a company we in RK Equity have been advisors to and have had equity interests in since last year. We should note that we have not been paid to prepare this video, and all Rodney's comments and research are his own independent opinions. Rodney and I are not financial advisors nor broker-dealers. This video is for information purposes only and should not be considered investment or financial advice. Please do your own research and read the disclaimer at the end of this video or on RK Equity's website. Before Rodney provides his comments on Hyperion, I'll make a few of my own. I've known and advised Hyperion founder and managing director Tazo Arima for more than 10 years from seed funding stages, during which time I watched him and the teams he attracted create $2 billion resource developers. Coalspur from 2009 in Alberta, Canada, which is now in production, and Piedmont Lithium from 2016, which signed an offtake with Tesla, is in the final permitting stages for its flagship Carolina lithium project, and at the bottom of the lithium market, has partnered with and secured access to high-quality spodumene resources with Sayona Mining in Quebec and Atlantic Lithium in Ghana. Tazo and his Piedmont co-founder, geologist Lamont Leatherman, were featured on the front page of the Wall Street Journal in March of last year. I've left a link to that article in the video description if you'd like to check it out. Following the Piedmont playbook from 5 years ago, Tazo researched and took a view of what would be the largest, most important critical minerals, in this case, titanium and rare earths, for which the US has become a net importer, with an eye toward reshoring domestic supply with the highest sustainability and ESG standards. In the last 20 years, China has increased its production of titanium sponge by 22 times, while the US has decreased to almost nothing. This supply side dynamic is a national security risk as titanium is widely used in military applications. As with Piedmont, Tazo and his Tier 1 team of geologists and mining engineers raised 2 million Aussie, anchored by the revered mining venture capital group, Apollo Group in Perth, Australia, and listed Hyperion on the ASX in December 2020 at a 4 million Aussie market value. Having secured a meaningful land position in a high-quality critical mineral deposit in the southeastern United States containing titanium, zircon, and rare earths, Tazo has built a world-class operating team and board of advisors, signed MOUs with billion-dollar public company off-takers, including Energy Fuels and Chemours, and has attracted strong institutional investors, including Fidelity, which anchored a significant 24 million Aussie raise last August. Hyperion today is currently trading at around $1 Aussie and has a market cap of US $100 million. As Hyperion currently only trades on the ASX, Tazo started 2020 announcing Hyperion's plans for a USA listing through American Depository Shares, again, following the success of Piedmont, MP Materials, and other critical minerals developers targeting the largest pool of capital in the world with a full SEC registration. And with a nod to the branding genius of both Steve Jobs and Elon Musk, Hyperion is also changing its name to IperionX. US supply chain insecurity for a whole host of critical minerals is a function of a lack of both resource development, that is traditional mining, but as importantly, the midstream processing of raw ore into high purity materials for high specification performance applications. Specialty chemicals and advanced materials for additive manufacturing are non-commoditized critical supply inputs that can represent the single point of failure to manufacturers of EVs, batteries, military aircraft, wind turbines, and other applications. Like Albemarle in lithium, those with the largest, highest quality resources and processing technology trade at significant premium market multiples to traditional commodity producers like iron ore, copper, or oil. MP Materials, for example, which has developed a significant profile in US capital markets with a $7 billion market value and an agreement with GM for its Stage 3 magnet plan, still sends 100% of its mined material to China for processing as it develops that processing expertise itself in the US as part of its Stage 2 operating plan. The Hyperion story is both a world-class strategic mineral resource in Tennessee and a processing technology play focused first and foremost on critical mineral titanium, and secondarily, the same rare earth elements MP targets for rare earth magnets used in EV motors, windmills, and other applications. At the start of this year, RK Equity created scoreboards for titanium and rare earths, similar to the ones we've created for lithium, nickel, and graphite, and we highlight where Hyperion is ranked. As with our recent video on graphite, Rockstock Channel will be spending additional time this year on other highly nuanced materials like titanium and rare earths, for which there is limited investor or market knowledge and understanding. We interviewed Adamas Intelligence's founder, Ryan Castilloux, and we participated in Adamas's North American Rare Earths Conference alongside Hyperion last year. We have provided a link in the description to our Rockstock Channel interview with Ryan, as well as the presentation Tazo gave at the Adamas event about the rare earth aspect of Hyperion. Rodney wrote a research report late last year and will focus his discussion today principally on the titanium aspect of the IperionX story. But one last thing I'd like to point out from Rodney's note is how favorably IperionX's rare earths materials compare to that of MP materials. MP materials highlights how high the grade of its ore is relative to its peers, which is certainly true. But it is also true that its deposit is a bastardite style of ore, which is relatively hard rock that is difficult to process. And the deposit can largely produce economically principally just two rare earth minerals of high value, neodymium and praseodymium, or NdPr for short. IperionX controls a large mineral sands resource, the McNairy sands deposit, which, as the name suggests, is a softer sand, which is easier and less costly to process. From a rare earths perspective, it is a monazite deposit, which contains a larger basket of economically extractable materials. In particular, the grade of its NdPr matches that of MP's, but importantly, IperionX's deposit contains the two other high-value rare earths important for magnet motors, terbium and dysprosium. Dysprosium is also used in nuclear reactors and are key for US military applications. Again, rare earths are important, but second to titanium in terms of IperionX's focus. As such, like MP Materials currently processes its rare earths concentrates elsewhere, IperionX has signed an MOU with Energy Fuels, which is building facilities in Utah for the processing of monazite rare earth elements. IperionX plans to utilize the simple mining of its soft mineral sands in Tennessee to supply its rare earths feedstock to Energy Fuels, providing a low to no cost entry into the downstream rare earth element supply chain. Hyperion will also focus on developing its integrated mine and titanium processing technology, which could disrupt two gigantic markets, stainless steel and aluminum.
Unlike lithium, in which China and the rest of Asia are the biggest consumers of the specialty chemical, and the US is currently a small consumer, the largest market for titanium end products, and specifically titanium metal, is the United States. This includes more commoditized markets like paints and pigments, which consume titanium dioxide minerals such as rutile and ilmenite, but critically important industries like space and aerospace, including military aircraft, which rely on titanium metal. The last US producer of titanium sponge, which is the primary form of titanium metal, closed in 2020, meaning the US was 100% reliant on imports from last year. While IperionX could become a highly profitable and important source of US supply to the titanium market as it exists today, the much greater potential is for the company to pair its world-scale Titan mineral sands project in Tennessee with new technology that can substantially reduce both the cost and carbon intensity of high-end titanium performance products and make them viable substitutes for aluminium and stainless steel applications. Titanium is lighter, stronger, and more elastic than other metals. The average consumer might be aware of titanium as a premium-priced product in golf clubs. Titanium club heads are bigger but not heavier, so you can hit the ball farther and straighter. Premium priced titanium bicycle frames are highly prized as they cope better with bumps and bashes and are highly resistant to corrosion, unlike steel. IperionX's big disruptive idea is to substantially lower the cost and carbon intensity of titanium metal powders and metals by commercializing and scaling processing technology that's been in development for over 10 years. The technology has been successfully piloted thanks to the Department of Energy funding of Dr. Zach Fang and his team at the University of Utah. If successful, IperionX will not only make luxury golf clubs, bikes, and watches affordable for the masses, but could allow for the substitution and creation of new improved products currently served by the $200 billion aluminium market and the $100 billion stainless steel market. In other words, IperionX's mine-to-metal vertical integration could disrupt an additional $300 billion of total addressable market that is 12 times larger than the current $25 billion titanium market. I'll discuss this more shortly after talking about IperionX's world-class mineral resource. IperionX's Titan project, comprised of the McNairy mineral sands deposit, is a multi-mineral heavy mineral sands deposit comprised of high-grade titanium feedstocks, such as rutile and ilmenite, in addition to rare earths and other high-value materials. Titanium feedstocks are used in the paint and pigment industries and titanium metal for the space and aerospace industries, as well as luxury consumer products. The price of various titanium products across the supply chain range from under $1,000 a ton to as high as $300,000 a ton. I believe that the Titan project will be highly economic, simply producing lower value-added products, given its proximity to the USA pigment industry and its latent demand for concentrate, as the deposit allows IperionX to access the high-grade near-surface material. Towards this objective, IperionX signed an MOU with Chemours for the potential supply of 5 years of titanium feedstocks, including ilmenite, rutile, and staurolite. Chemours is one of the world's largest producers of high-quality titanium dioxide products for coatings, plastic, and laminates, and operates a pigment plant a mere 20 miles from where IperionX's Titan project sits. A differentiating factor when compared to its global peers is IperionX's potential low operating costs. Mineral sands projects are heavily influenced by electricity and labor. We estimate that in West Tennessee, electricity costs could be as much as 60% less than Western Australia, and skilled labor approximately 30% less. I wrote a research note in November, which is on RK Equity's website. Using conservative pricing and OPEX assumptions, I forecast approximately $225 million steady state EBITDA from 2027 that could potentially rise to $400 million from 2030, which would justify a $1.2 billion after-tax NPV using a 10% discount rate with a 53% after-tax IRR and a 25-year mine plan. This would equate to approximately Aussie $2.90 a share. I don't see IperionX simply as a heavy mineral sands miner, however, but rather a disruptive specialist additive manufacturing play combining the solid upstream Titan resource with low carbon downstream technology agreements. IperionX has acquired an option to acquire Blacksands technology spun out of the University of Utah in 2013, and they've developed 5 core patent families with over 40 patents worldwide. Blacksands has received $12 million in funding, much of it from the Department of Energy's RPE program, developing these patented technologies, including a pilot plant that has demonstrated the ability to consistently produce low carbon, high quality titanium powders, and is currently in operation. Historically, a barrier for the widespread use of titanium is the cost associated with manufacturing a finished part with half the cost associated with fabrication. Blacksands' process has the potential to simplify the titanium metal manufacturing process by eliminating process stages and reducing energy consumption and manufacturing inputs. Combining this process with a commitment to reduce emissions in mining, IperionX believes there's an opportunity to create the lowest carbon titanium metal powder production business globally. Titanium powder to print 3D parts is a recent technological breakthrough, strength to weight characteristic relative to steel and aluminium. High growth industries such as space and aerospace and EVs, where strength to weight is critical for performance, will likely gravitate to low carbon titanium 3D parts if it is economical to do so. Blacksands' process has demonstrated the potential to produce titanium powders with low to zero carbon intensity, significantly lower energy consumption and cost, and product quality that exceeds current industry standards. If IperionX can become a US-based producer of high-quality, low to zero carbon titanium powder that sells for well below the current $300,000 a ton price, what is the potential market size given the rapidly advancing 3D printing, additive technologies, and growing demand for space, aerospace, and EV industries? Toward this objective, IperionX signed an agreement last July with EOS GmbH, the global leader for industrial 3D printing of metals and plastics, to evaluate opportunities to deploy low and zero carbon titanium metal powders using Blacksands' technology. As an additional valuation on top of my estimated $2.90 Aussie valuation of the Titan project mentioned earlier, I affixed in my November note a $1.20 Aussie valuation for the potential in downstream opportunities, both in titanium with the likes of EOS, as well as in the processing of rare earths monazite with energy fuels. Should IperionX advance its downstream initiatives further and start to tap the $300 billion stainless steel and aluminium markets, the potential upside to the company's fair value is substantial. In terms of milestones for 2022, we're looking at a JORC mineral resource upgrade, potentially in Q1, a scoping study on the mine and mineral processing plant, which will be key, that should be done by Q2, strategic partnerships and offtakes for titanium metal, minerals, zircon, and monazite, progress the scale up and commercialization of the Blacksands technology.
Thank you for watching this video about Hyperion Metals, soon to be called IperionX. Rodney and I plan to release management interviews with IperionX and other critical minerals developers in the near future, so please make sure to click the subscribe button to receive notification for when these are released. And if you have any questions you'd like to ask IperionX, please make sure to put them in the comments and we can bring them up in future interviews.